Hey traders, Richard here from Ninjacators, and in this video I want to showcase one of my favorite indicators that I use and some of my members use on a daily basis to trade the futures markets with. Now it's called the real-time supply and demand indicator, and you can see here on both the left side and the right hand chart. I'll show you a little bit later how I combine this in a strategy. You've got these green zones as well as these red zones that's printed on the charts. Now these green zones are basically demand zones, and these red zones are supply zones. Alright, so the high probability areas or zones where price might gravitate towards and find support and resistance at. Now these zones are automatically printed by the software as soon as there's been imbalances in volume, blocks, volume as well as order flow activity. Alright, so then the indicator goes ahead and automatically plots that for you. So you don't have to go and do that yourself. It works on any futures market as well as on any time frame that you wish to use. Now with this strategy, I like to see basically an area where you've got a higher time frame and a lower time frame supply and demand zone overlap with each other. And I call this strategy the supply and demand synergy trade. I trade this on a weekly basis with members in a live trading environment. And it's a very simple strategy to follow, yet very, very powerful. So in essence, all I'm looking for is to determine if the market I'm looking at on a 5-minute, which will be my parent or anchor chart, is in a trending condition. And a very simple, I've got a indicator on here called a volatility trend indicator. When price is below it, generally trends lower and it's red, so we'll only be looking for short setups. And during that environment, I only want to trade if price were to reach supply zones and take shorts from them. On the flip side, if the volatility trend indicator, again, on the 5-minute is bullish, I only want to trade demand zones, i.e. these green zones, and when price gets into them, and I've got a confluence of a 5 or an overlap of a 5 and a 1-minute demand zone, as soon as price moves into it, there's high probability that that might act as support, and I want to take a trade from there to the upside. All right, so that is the one condition I'm looking for. Again, very simple. And you'll see there are also different color zones. We've got this lighter green as well as this darker green, darker red and lighter red zones. And these lighter red zones and lighter green zones are basically just zones that's been retested already. So as soon as those zones have printed, maybe price moved away from it for a little while, came back, retested it, acted support and resistance, and then the indicator tells you that it has been tested already. Now what I like to do is trade zones, as I call fresh zones, that's not been tested yet. And since, for example, in this case, the NASDAQ is currently trading above this volatility trend indicator, it's indicating a bullish sort of trend here on the 5-minute. I would then go ahead and look for a zone, in this case a demand zone. I only want to trade long from the demand zones because the indicator is telling me to take long trades or that we're in a bullish environment. I want to go find a zone that has not been tested yet. And here we can see we have, and you can see this number here, 13 ticks, basically means it's 13 ticks high, this zone, right? So it's a 13 tick wide or high zone, around about the 18,275 to 18,278 level on the NASDAQ. Now, as soon as I've marked that off with my rectangle, I also set my rectangle to print on the other charts of the ES, whatever time frames I want to look at. And you can see here, it already automatically plotted on the 1-minute. Now, this is exactly what I mean by wanting to see an overlap between a higher and a lower time frame supply demand zone, in this case demand zone. You can see that there's one that's been tested before because it's a different light color, and there's one that's not been tested. In this one on the upper side 3 ticks high, and this one to the bottom side 4 ticks wide. So we have on the smaller time frame, again this time on the 1-minute, a demand zone lying within the higher time frames demand zone that's not been tested. So for me to take a long, I would like to see price and be very patient for price to move into that 3 tick wide zone and give me a reaction to the upside. And there's various ways that I like to get in. I want to see a bullish engulfing candle if I want to take a long, or I want to see what we call an indecision candle, which is called a lost triggered candle that I teach that's set up during the FastTrack membership live trading events that we hold. And then quite often, or to a very high degree, if you've got the patience to wait for price to actually move into those areas, they offer really good trading locations and high probability trade setups. Quite often, because you have the overlap between a high and a lower time frame supply demand zone, they act as very strong support and resistance areas, which you can then use to your advantage in a strategy. Again, the strategy is called the supply and demand synergy setup. I traded with our FastTrack members. So if you want to get your hands on this indicator and also see how we trade this live with our trading community here at Ninjacators, then consider joining our FastTrack program. There will be a link below in the description, and I hope to see you on the inside. Until next time, take care and happy trading. Bye-bye.